Many of the questions I'm asked by business owners, both new and existing, revolve around quarterly estimated tax payments. They have heard this term, they understand it's something they should be doing, payments they should be making to the taxing agencies, but they're just not exactly sure what they are, when they're due, and if they have to pay them. So today, that's what we're breaking down. We're going to talk about what exactly these quarterly estimated tax payments are, who needs to be paying them, and when they're due. So let's start with what are quarterly estimated tax payments? These quarterly estimated tax payments consist of two pieces of taxes. The first is your income tax. Anytime you have taxable income, you're going to owe income tax to the taxing agencies. That's the IRS for your federal payments, and if you're subject to income tax on a state level, it's going to be your state taxing agency. In addition to the income tax, you also have your self-employment or payroll taxes that you have to pay on earned income. Earned income is typically either your W-2 wages if you're an employee who works for somebody else, or if you are self-employed and you own your own business, you have business income. And that business income is going to be subject to self-employment tax. Regardless of what you call it, payroll tax or self-employment tax, this bucket of tax payments or tax amounts consists of your Social Security taxes and your FICA/Medicare taxes. When you have earned income or income at all, the IRS is expecting you to pay your taxes throughout the year and during the year in which you're earning that income, you're earning that money. If you don't pay those taxes throughout the year while you're earning it, then you're going to end up with a big old tax bill come tax time when you file your tax return. And there's likely also going to be penalties and interest that have accrued that you're going to have to pay in addition to the taxes that you owe. When you're a W-2 employee, you don't have to think about quarterly estimated tax payments. And that's because your income tax, both your federal and again your state, if you're subject to state income tax, as well as your payroll taxes, that's your half of the FICA, Medicare, and the Social Security taxes, are all withheld from your wages by your employer, and then your employer is making the payments to the taxing agencies. This is why your net paycheck tends to be or is always less than your gross pay. So if you make $60,000 a year, but you know you only received $45,000 a year, that's because your employer is withholding your income taxes and your employee portion of those payroll taxes and making those payments to the government on your behalf. So you don't have to worry about it. And typically when you're a W-2 employee, you're either getting a refund when you file your taxes at the end of the year or after the end of the year, or you might owe a small amount, all right? If you are a W-2 employee and you are having taxes withheld and you're still owing money come tax time, it's definitely time to adjust your W-4 with your employer. But that's a whole nother subject for a different day. Today, we want to really focus on your business owners out there who aren't getting paid through W-2s. So you're not having that money withheld on your behalf. Therefore, you are wanting to make these quarterly estimated payments in order to submit your income tax and your self-employment tax on a consistent, timely basis to your taxing agencies so that you not only don't get a big old bill, right? You're not stuck with a big old bill come tax return time, but you're also not accruing any penalties and interest on the tax you're owing. So next we want to talk about how much your quarterly estimated taxes should be. As I mentioned previously, your quarterly estimated tax payments are comprised of two pieces or two parts. It's the income tax, which is what we talk about when we talk about marginal tax rates and how much income tax you're paying to the government. And there's also the self-employment piece, and that's the part that a lot of people tend to miss when they're making quarterly estimated tax payments. So we do have a video on marginal tax rates, and that's what pertains to your income tax if you're interested. And right now, I also want to talk a bit about how that self-employment piece of the tax is actually calculated. We mentioned that your self-employment tax consists of your Medicare and your Social Security, right? And it replaces the employee and employer portions that would be paid if you were a W-2 employee. So we mentioned how when you're a W-2 employee, you pay your employee half, your employer is also responsible for half of those payroll taxes. When you're self-employed, you're the employee and the employer, so you're responsible for the full amount, and that amount is roughly 15.8% of your net business income. So let's put that into numbers. Let's say your business has $120,000 in gross receipts and they have business expenses of $70,000. That leaves you with a net profit of $50,000. So that $50,000 is not only going to be subject to the net income tax, which is based on marginal tax brackets like we talked about, but it's also going to be subject to that self-employment tax, which is 15.8%. 15.8% of $50,000 is $7,900. So you're going to owe $7,900 in self-employment tax plus whatever your income tax is on that money, okay? So that is the piece that tends to get missed, and I wanna make sure that you guys understand that those quarterly estimated tax payments should include both of these pieces. In the next video of this series, we are gonna talk about how to calculate those quarterly estimated tax payments, both pieces, based on how much income you're making. And I've actually created an awesome worksheet for you guys as well to use as a tool to get a little bit of a more precise number on how much those quarterly estimated tax payments should be. But for those of you that just want to keep it simple, don't want to worry about worksheets, or maybe you're just not ready to go that deep, I'll give you a really easy guideline to follow. So if you don't want to calculate your taxes each quarter, a general rule of thumb is to use 40 to 45% of your net business income for the quarter and use that amount to set aside to pay that quarterly tax rate or tax amount. And people come at me and they're like, 40 to 41%, that's so high. Why would I want to pay that much? Well, that 40 to 45% is going to cover the 16%, we're going to round up a little bit, your 16% for self-employment income. It's going to include 22% for federal income tax, which is the most common income tax marginal tax bracket that is out there. And then it's going to leave a few percentages of a little bit of money for your state income tax if you have state income tax. And remember, I'm saying 40 to 45% of your net business income. That means after expenses. That's a really important thing to note. So next, who should be making quarterly estimated tax payments? Anybody who ends up with a big any sort of tax bill over $1,000 at the end of the year should make some sort of adjustment to their tax payments for the year. If you're a W-2 employee, that could be changing your W-4 with your employer. If you don't have W-2 income, then that means making quarterly estimated tax payments. So anyone who owes over $1,000 at the end of the year in taxes should be making those quarterly estimated tax payments, which, you guys, is basically any business owner. Any business owner making a profit should be making quarterly estimated tax payments. So when are estimated quarterly tax payments due? I'd love to say that they're due every quarter, which technically they are, but it's not perfect. And I'm sure you guys have heard me gripe about this pet peeve before. A quarterly estimated tax payment, if it was perfectly sketched out, would be every 3 months. It's close. Okay, so your first quarterly estimated tax payment for the year is typically due April 15th. Your second one will be due June 15th. Your third one, September 15th. And your last one, January 15th of the next year. I hope this video helps explain exactly what those quarterly estimated tax payments are, who should be paying them, when they should be due. If you want to take it a step further and you'd like some more guidance on how to more accurately calculate those tax payments, then please check out our next video and also download our awesome quarterly estimated tax payment calculator. If you guys have any questions about what we talked about today, go ahead and leave a comment below. And then I highly suggest you head on over to our Facebook community, Money, Taxes, and Finance for Small Business, because these topics are what we talk about on a regular basis and have live trainings on every week. You can access that group by clicking the link in the description box. Thanks for watching. If you found this video helpful, please give it a thumbs up, subscribe, and while you're loving on me hard, go ahead and hit the notification bell so you never miss a future video.